All right. Give it a few minutes for everyone to get in, but we are live now. So, a second. How's it going, Tucker? Once everyone gets in here, I'll do my little intro and we'll get started. So, unless you want to turn off the YouTube sound.
I did.
Okay, cool. Quick.
What's up, everybody? Hope you guys are doing all right.
Okay. Doing great. Yo, bro. Yes, this will stay on the channel. It will. It's it'll record it to my playlist. All right. So, looks like why did Apple remove MetaTrader? I have no idea. I don't really look into that type of stuff, but we're going to go ahead and get started here. So today we have Finesse FX on. I linked his Twitter and YouTube in the description if you want to check it out. And then other than that, I'm going to kind of let him take over. So go ahead.
What's up, guys? Hope everyone's doing well. Like he said, it is Finesse FX. Today we're going to be going over just, some basic price action skills. Hopefully you guys can, take advantage of some of these lessons. It's not going to be a super long video. I'm going to try to, dive straight to the point with some of this stuff. But, yeah, let's get rolling. Okay, so today we're talking about how to arrive at a directional bias. So with that being said, I'm choosing Australian dollar versus the US dollar as our example pair for now. We're going to dive into some other examples as well, but so it's going to be like a top-down analysis, like how you as a novice trader or whatever level trader you are, this is how I dive into my charts, starting from top down. So there's going to be multiple things that I'm looking for that arrives on all time frames. And shout out to ICT, aka Inner Circle Trader. These concepts are formed and created by him for the most part. So huge shout out to him for teaching all this stuff to us. So the 4 things or the 5 things is going to be, I'll write them out or type them out real quick. So we're going to be looking at order blocks. We're going to be looking at breakers. We're going to be looking at fair value gaps. We're going to be looking at, of course, our highs and lows. And when I say fair value gaps, I mean that in the form of voids, liquidity voids, fair value gaps, the sell side imbalances, and the buy side imbalances. I pretty much look at those all as like the same thing, but everyone has their own terms for it nowadays. But anyways, let's see. So when it comes to entries and exits, it doesn't matter what time frame it is. I like to keep in mind of all these right here. I use this right here. So go ahead and take a screenshot of that, whatever you want to do. I am going to take this off the chart for now. So keep all those in mind. So here's Australian dollar. So the first thing I typed out was the order block. So this is a monthly chart. So when it comes to a directional bias, we want to find those concepts I just listed on a higher time frame because, of course, the algorithm runs off of those things, and the higher the time frame is, the more relevant those price levels are going to be. So an order block. Everyone here probably, I'm guessing, knows what an order block is. So here is the last up close candle prior to the large one-sided engulfing bearish candle afterwards. So as soon as that monthly were to close like this, I would highlight that order block. So that's going to be a very sensitive level. I go from the wick to the body and extend that out in time. So yes, I am using the replay button here. That's the only way we can teach in hindsight, of course. But all this stuff was called in foresight long before it happened. So you see that reaction there. Beautiful. So in the form of backtesting, what else do we see? Those other things were a breaker. Hopefully everyone here knows what a breaker is, but you see this bearish down close candle. What happens after that? We have 2 consecutive bullish candles, aggressive, that takes out the stops here. So we have a bearish breaker and a bearish monthly order block. So this is a monthly chart. The relevance of this is very significant. So when you see bearish order flow, PD arrays being respected on our monthly chart, that means you only want to be staying bearish until we arrive at discount arrays. So right away, when we trade up into that monthly bearish order block, blended with the monthly bearish breaker, you want to draw your eyes down. Where can we be targeting? Well, first and foremost, old lows here. And then, of course, we have our buy side imbalance right here that has not been filled yet. So that's an imbalance. That's another one of the concepts I listed at the beginning of the video. So like I said, when it comes to entries and exits, I'm using those 4 to 5 concepts. I never deviate from that. I use it in every time frame. So we have the breaker, order block, monthly chart going lower. And we're going to look to target this buy side imbalance, which is this one singular candle right here. The imbalance starts from the previous candle's low or high right here. The next candle opens, we get a huge rally. The next month opens, they don't rebalance that. So the imbalance is inside of this one singular candle. Monthly chart. So here's that level. I'm going to go ahead and speed this up so we can dig into the next step of this. So there's the result of that. We're going to highlight that breaker that we talked about. I highlight the wick to the body. Extend it out in time. Let's dig inside and go see the relevance of that candle, or those 2 zones. So when it comes to support and resistance, you can use these levels as support because they are our algorithmic levels. Oops. So this box delineates the breaker. This box delineates the monthly bearish order block. And you see on a weekly chart, there is the respect. So once you see price respect those levels, that's how you know your order flow is in fact confirmed bearish. Keep in mind, the dollar index has been bullish all year long. So when you break price down to a lower time frame chart and you have these levels identified, you can look for those same exact concepts on a lower time frame chart. So here is the monthly breaker right here, this whole zone, okay? Remember at the beginning of the video, I said I used those concepts on all time frames. So what do we have here on a 4-hour chart? We have a 4-hour breaker. We have a down candle. Right after that, we have the back-to-back-to-back bullish candles that break the high here. We do nothing, but note that they dig up inside of that relative level, which is the monthly breaker. We don't do nothing here, but we wait for the breaker to be confirmed. We have a very, very large engulfing sell-side imbalance here. We wait for price to trade back up. You can draw an OTE from swing high to swing low. You're going to want to wait for price to come back to a premium. We only want to sell when price trades above 50%. So that's just basic ICT logic. Your OTE, your premium, your discount. So another thing you can blend with this is, or another thing you can note is, we have a market maker sell model. So the smart money reversals on sell models is always going to happen. So this formed on a 4-hour chart. I'm sure you can also see it on a 1-hour chart. Original consolidation is here. Distribution, redistribution, smart money reversal. I want you guys to note that the smart money reversal is always going to happen on a higher time frame PD array. So the smart money reversal here happened at where? The monthly bearish. It's lagging a little bit, sorry. So here, I draw it from the wick to the body, like I said. And why is this a breaker? Because it's the last bearish closed candle prior to the stop run here. Trade back below, create a bearish order block as well on the monthly time frame. So there's multiple things to note here. So that's how I got this blue shaded level right here. So you have your ICT sell model, but that smart money reversal is always going to happen, and it's always going to happen at a higher time frame PD array. Where are they going to go? Once they hit that, they're going to go for the old lows. So look on a 1-hour chart, there's 4 back-to-back bearish candles here. That's what gives you that 4-hour bearish breaker. Also, there's an imbalance here. You can blend all this stuff together. This is basic ICT logic, but I'm going to refine it down. When we get to Euro, we're going to talk more in depth about it. So if you want to study this price action right here, this is between the end of August. So if you go to the dollar index at the end of August, you're going to see dollar declining to discount arrays looking to move higher. So when dollar moves higher, we're expecting the foreign pairs to move what? Lower. So that's a beautiful example right there. I really love the market maker sell models, the market maker buy models, because every time I use those in my own personal trades, the smart money reversal always happens at a higher time frame PD array, and I believe that's beautiful. It's really beautiful when you start seeing that play out like that. And just letting you guys know, this is my first live podcast on someone else's channel, so it is a bit nerve-wracking. But let's go ahead and go over to Euro USD. This is another fun example of what we just talked about. On Euro, I'm gonna be showing you guys how I was able to call out each monthly candle's high. So when you think of a monthly candle, or any candle, in fact, every candle has a what? A open, high, low, close, and they call that what? The power of 3. So for the past 2 months on Euro USD, using these concepts that we were taught by ICT, we were able to call out these monthly highs. So at the beginning of the video, what are the 4 things I listed? Imbalances, order blocks, breakers, old highs and old lows, and fair value gaps. So price is consolidating right here. Before it can move any lower, it's always going to stop shy before the main intended level is hit. And I don't care what time frame that's on, it happens like that 9 out of 10 times. So when Euro was consolidating all throughout July, it got on everyone's nerves. It got on my nerves. I took a couple losses inside of this consolidation. Yet I had this imbalance noted the whole time, which is this one singular candle down. It created the sell side imbalance. So as price was sitting here moving sideways, I did not want to sell Euro until it popped up here. Here in hindsight, it eventually did pop up there. So before going lower, it has to come to a what? A premium ICT PD array. And it does that in the form of our liquidity void, our sell side imbalance. So it takes out stops above these highs here, manipulation. This is another example of the ICT market maker sell model. Our original consolidation is here, distribution here, manipulation, smart money reversal. Again, our smart money reversal happens where? It happens at a PD array. Look left, our PD array is the imbalance here. Once we break below here, that's when it's confirmed. Well, where do my eyes go? My eyes, just like the lesson on Australian dollar. We have a breaker. Where's the breaker? Our bearish candle here. What happens after that bearish candle, guys? We have back-to-back bullish candles that take out stops here, all above these highs. Price fills in this inefficient area and makes it what? Efficient. So it's okay, and now it has the green light to go lower. Once it breaks below this red candle, I want this candle here to be used as support to go lower. And it does that. So when we're looking for targets, we're using those same things we talked about at the beginning of the video. Where is our target? It's going to be below these lows here. And then we're going to, or I had this level right here marked out, which is a daily discount for value gap. And you see they filled that in right there. Eventually they came for the lows here. This area right here, when they filled in this fair value gap up here, note that that was, hold on one second, my bad. So those PD array levels, it's always going to be, 9 times out of 10, it will be a monthly high or weekly high. So we have our market maker sell model right here. The high that formed here was, in fact, the monthly high for August. This horizontal line, here's August, and it was the high of the month. Look left, we have this bullish candle, which is a monthly what? Bearish order block. Price ticked the wick of that. So you blend that monthly order block right here with the 4-hour market maker sell model with the imbalance here. Price breaks below the breaker. They come up, consolidate, and keep moving lower. And then that daily fair value gap, which was here. Moving on. Now, you don't just forget about that level right here. Okay, this breaker is still relevant. All right. Euro went sideways again. They held it sideways while they moved cable a lot. So before price even goes lower, what does it have to do? It has to come back up to a what? A premium PD array. They come right back up to the breaker again, which is here. Here's the high of September 12th. That's going to be the monthly high of September. Note that this daily breaker was the monthly high. Okay? That's what they mean when price is fractal. That's a good example of that. So if you go back to the monthly chart, here is September. Spot on. Bam. So that's the monthly high of September. So these concepts right here, they really do work. Huge shout out to ICT. I wouldn't know any of this shit if it wasn't for him. You know, I'm sure you guys have put in lots of hours as well into his content. I just love being able to go back and see how it works, picture perfect, and it's very beautiful once you start, you know, clicking everything together. It's like a giant puzzle for me. But so this daily breaker level, let's see what it looks like on a weekly time frame. On a weekly time frame, Euro USD came up right here. I'm actually going to remove everything. So on August 8th, they created and confirmed a weekly order block right here, which is going to be this last bullish candle prior to the engulfing bearish down move. Right away, a lot of people will draw a line and delineate the order block here. And they're going to want the next weekly candle right here to go up and trade and hit that, move lower. Me, personally, I don't want that. I want price to consolidate sideways like it did and engineer more liquidity and then create manipulation and liquidity in the market, then pop up and hit it, then go lower. So you see that they did do that. The fair value gap is noted right here from the order block's low and the very next weekly candle's high. They did that on purpose. They didn't just immediately rally up to the order block and move lower. They wanted to engineer more liquidity into the market. So you see Euro, in fact, they filled the fair value gap, hit the weekly order block. That weekly order block level is the same exact thing as the daily breaker, which was this bearish candle, remember?
There's a few
Prior
questions
to the stop
on
rate.
using just the wick or the whole body for order block. Can you kind of go over why you use the
Okay.
wick and the
Yeah,
open?
a lot of people look at that differently. So, yeah, I can. I know a lot of people have different thoughts and opinions about that. I get that question a lot. But over the years of my personal trading, I have come to find that when I use the wick to the body, like how I did here with this breaker, I find that it's more sensitive. So it's not just the order blocks I do that with. I do that with the breakers as well. So here's the daily breaker. Here's the wick up to the body. Extend it out in time. That's going to be a more sensitive level. And that's just something I personally have discovered over my many years of price action. So a lot of times people, they'll wait for price to come right up to, you know, equilibrium of an order block so they get the most less drawdown. I don't care about that. Like I said, I use the wick to the body because that's going to be the most sensitive price points inside of that order block. Um, in order to get a refinement entry on that, you can dig down inside of your order blocks and you're going to see the same concepts that we've been talking about. Like, let's say this weekly green candle, which is the weekly order block. Let's say we dig down inside of that candle and we found like a giant, another lower time frame order block inside of that. Well, let me go back. Where was that at? So that's what I refer to as dissecting a candle. So if this candle had like a fair value gap with an order block inside of it, like towards equilibrium, that's when I would use more than the wick to the body. But for the best case scenario, I always use wick to the body to get my entry. I don't focus on perfection. I just want to be able to get in. And like I said, over time, I've come to realize that that gets me into my trades more often than not. So that's just something I do personally. You can test it out yourself on your charts.
Quite a few people are asking if you could do that for ES on the monthly/weekly charts, since a lot of them watch
Like
ES.
the indexes.
Yeah, S&P 500.
S&P. Can we do NAS? Is that okay?
Yeah, NAS would work.
I don't trade NAS too often, but I'm starting to get more into it. These indexes, they're just so violent, and I'll admit, I'm not built for it yet. I'm still working my way into it, but I can read the price action on both of them. But I'm slowly starting to get myself into these markets. But due to the forex catastrophe that's been happening over the past couple weeks, I can go ahead and take a guess. I'm going to be getting more involved in these markets. More opportunity. Forex is starting to die, it seems like. But so again, at the beginning of this video, remember those 4 things I typed out. Keep those in mind when we go over this, okay? We're going to start on a daily chart this time. Oops, I'm going to zoom out. So here's a swing high, okay? Here's a swing high. I always want to look left. What just recently happened? If we look left from this swing high, we see how price took out these equal highs. And I actually remember calling this out months or a couple weeks ago when price was floating right here. Be aiming for these equal highs here, and they took them out and moved lower. Okay, so this is going to be a different kind of lesson, but we're still going to talk about those main concepts. Okay, so we're going to talk about the left side of the curve and the right side of the curve of the swings. So I'm going to draw a vertical line right here at this overall swing, okay? And again, go ahead and note that at the reversal of the swing right here, the high, you look left and we took out liquidity, these equal highs, okay? That was enough to make it turn around. And I'm sure on a higher time frame, I'll go ahead and look at it, there is a monthly bearish order block at that level. It's not the most prettiest. Let's go ahead and move this. But it's going to be this green candle right here prior to this down move. They take out this monthly high, which was, this monthly high right here was those daily equal highs. That's why the line was there. So these daily equal highs right here was a monthly high. Price took out a monthly high, then they reversed. So let's go ahead and slap that vertical line back on there. So we have the left side of the curve of the swing, then we have the right side of the curve of the swing. The reversal happened after taking out a monthly high and tagging a monthly bearish order block. So let's go ahead and note all of the bullish order flow on the left side of the chart. So on the left side of the chart, you're going to be seeing bullish PD arrays being respected. On the right side of the chart, you're going to want to see bearish PD arrays be respected. And that question that gentleman asked about the wick down to the body of order blocks, I'm going to be drawing that out right here for you, okay? So I'm going to show you why I use wicks down to the body. I've been doing that for years now, so it's not just like I'm deciding to do that just all out of nowhere, you know. So wick down to the body of this order block. We have the last down close candle prior to the aggressive back-to-back-to-back bullish move. We have a retracement back down to the bullish order block here. Rejection, higher. Keep going higher, keep going higher. We have another bullish order block. I'm going to highlight the wick down to the body, extend it out in time. You're going to see how price dips down into the wick, then goes higher. Where do they go? They target the monthly high, aka the daily equal highs here. Then they go lower. Okay, so now we're on the sell side of that curve. Okay, you're going to see on the sell side of the curve, you're going to see the sell scenarios matching up with those same buy scenarios. So what I'm going to do is this level here, the daily bullish order block, I'm going to extend it all the way out in time. Okay, and I'm still going to be using the wick down to the body to show you the relevance of that specific zone of the order blocks, okay? So here's the left side of the curve, and we're going to start from the top of it, near the reversal. So here's the bullish order block. You see how it got respected. So you want to tell yourself, and you want to note the fact that it did get respected. So now we're on the sell side of the curve. What did they create inside of that same zone? A bearish order block. Isn't that cool? The bearish order block is going to be these two back-to-back green candles prior to the aggressive decline lower. So these two green candles, I'm not going to zone it out in time because it'll mess up this, but here, I'll do it for you guys. Okay, so I'm going to use both of these candles blended together is the order block. Extend it out in time. There's your sell side, right side of the curve, PD array, using order blocks only. You see the rejection? There's also an imbalance that was created with this decline, which is from this candle's high to the order block's low. There's your fair value gap. Blend it with the order block, blend it with the order blocks that were created from the left side of the curve. So they have to offset their old positions on the right side of the curve, the sell side. They have underwater positions. So now we're going lower. Again, left side of the curve, buy side order block right here. Extend it out in time to the sell side of the curve. What do you see? Bearish order block, which is this bullish candle right here. Right after the bullish candle, we have the move lower. When they close below the green candle, it is now a bearish order block. They give it a couple days. They hit the wick to the body. You can see it right here on this candle. Here's the order block. Same exact level from the left side of the curve. You see that? Now we have a bearish order block. So that's how you know there's an algorithm. That's just more support that Michael is right, that there is an algorithm, because I have seen this example happen on multiple charts, and it's really a beautiful thing when you start discovering it and seeing it with your own eyes. And it doesn't always have to happen on a daily chart. It can be on a 15-minute chart, but it is beautiful when you think about price like this. Where's price going to go? It's going to go to the low resistance liquidity run. We have a trend line phantom here. Low, 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 lows. So order block and the dip lower. I wish I would have traded NASDAQ last week just for the sake of this trade.
There's a quick question about how do you use projections and pick your future price targets and expectations if you use projections.
I don't use projections. No, that's one thing I don't do. But future price targets, like I said at the beginning of the video, it's just, this video would be, this lesson would be hours long if I were to answer that question. But I use opposing PD arrays. So, we have a bullish order block here, okay? And that's way down here. Where are we going to go? We're going to go to an old high for a target. Here's our old high right here. We have old highs here that are relatively equal. Remember at the beginning of the video, again, go back. Old highs, old lows, order blocks, breakers, any form of inefficient price action. I use that for my entries and exits. So here I'm using the order block for an entry. I'm going to use an old high for an exit. And you see that happened right here. Hopefully that could help answer your question a little bit, bud. So is there some more questions?
It looks like, how do you enter the market? Limit order or lower time frame analysis? So I guess, do you go down to lower time frames to refine entries, or how do you do that?
That honestly varies on how the setups look, because we all know every week, it's never the same exact setup. There's always going to be a couple things that are missing, or a couple things that have, changed from the last trade you took, although it may look similar. So it just depends what I'm doing at the moment. If I'm up at London, I live in the East Coast, New York time. So London for me is 3 a.m. If I happen to be up trading, I'm going to use a market execution order if I'm up for London. But if I have a level where I'm expecting it to hit while I'm sleeping, let's say, I will use a limit order. So if I'm going to place a limit order, and that's another reason why I use the wick down to a body on order blocks. Because let's say I'm going to go to bed, right? And I want to buy NASDAQ at this bullish daily order block, all right? People don't want to encounter drawdown, so they're going to want the best case scenario entry, okay? They may put their buy limit inside of the body. Okay? I put my limits from the wick down to the open, or the close, whatever, the open here. So I would put my limit a little bit before the order block actually gets hit, just so I know I'm going to get in that market. And with controlled risk, your stop losses would always be below the order block. Why? Because if that order block were to get violated, that means price action is no longer respecting bullish order flow. So you would then want to change your your bias and get in sync with the market. But yeah, so when I use limits, it's mainly if I'm going to be sleeping, and it just depends on how juicy that particular setup looks and how much I trust it.
Let's see. I'm reading a couple. Can you give an explanation on PD arrays? What PD arrays are for you, and how do you define them?
Okay. Well, so the PD array is logic taught by ICT. Um, it's a handful of stuff, more than what I actually typed out at the beginning of the video. But to me personally, PD arrays is just what the algorithm moves off of. You know, from a top-down perspective, from a monthly all the way down to a 1-minute chart. Price hits a monthly bearish order block, we're going to expect price to go down to a weekly discount PD array. So there's a lot of teachings on that online. I don't want to dive headfirst into that. Like I said, we'd be here all night. But it's like ping pong, you know, price. It's like ping pong. It's going to hit a monthly PD array up top. Then price is going to go lower and search for an opposing discount lower time frame PD array down low. Once it hits that, it's going to want to come back up to the opposing PD array again up top, and vice versa. And while it does that, it's engineering liquidity the whole time.
Another question is, at what point do you consider a fair value gap or an imbalance efficient? Like, does it have to reach so far into it, etc.?
Yeah, that's a good question. That's a really good question. There's like a black and gray area, or gray and white area, however they say that phrase. Um, that's a really hard question, you know, and it really depends on whether. So if I have an imbalance right here, some people are going to want it to come and fill all the way up to the last bullish candle, okay? Something you always want to remember is if there's 2 consecutive bullish candles, that creates the order block. So you can use both of the candles. So therefore, my area was, my fair value gap isn't from here, this candle's high, to this candle's low. That's not my fair value gap because price never completely filled it in, okay? I use both bullish candles here in this example. So my fair value gap is this candle's low and this candle's high. So price filled in the entire fair value gap. So now it is balanced. But something you can do when you have a large imbalance, you can dissect that imbalance and dig down into lower time frames and look for another fair value gap or an order block or another PD array inside of that higher time frame imbalance, and you can look for price to expect to want to trade up to that level specifically. Easier said than done. I'd have to show you an example, but if you guys have any other questions, feel free to also hit me up on social media. I love talking about price action. I do it all day, every day, so I'd be more than happy to show you guys some more stuff.
Yeah, if you guys have any other questions, feel free to let loose.
But
Meaning order
those were
flow
the
is
three.
better.
Those were the three main examples I wanted to go over with you guys today. So hope you guys enjoyed it.
Yeah, we'll give it a few more minutes for questions. Meaning order flow is better suited than order block. David, do you want to rephrase that? I'm not exactly sure what you mean there.
Can we talk about some divergence real quick?
Yeah, go for it. So,
Okay,
divergences.
so here's something real quick on SMT divergences. I know a lot of people try to use them like all day, every day on a lower time frame, and you'll get caught up doing that. Honestly, like I have when I first was taught them by Michael. I was on the 1 minute time frame, 5 minute time frame. Oh, euro made a higher high on the 5 minute time frame, but dollar didn't do a lower low on their time frame. So let's go ahead and take a trade. And that would get burned. So just keep this in the back of your head when you're looking for divergences, okay? So here's that same example on euro, the weekly. So for this weekly candle of September 12th, when they hit the weekly order block and filled in the weekly fair value gap, okay? When they made the higher high right here and did that, if you were to go to your dollar index chart, you'll note that dollar never dipped into the fair value gap. So here's the low here on this candle. And here was that September 12th week right here. They never traded below the low here. They never hit the order block, and they never filled the fair value gap. And again, on euro, you see they did that by a long shot, and they made it efficient. So what does that tell us? That tells us that the dollar index is failing to make a lower low, which shows the aggression.
Do you want to
So
check the
there's something I want.
comments? Oh, yeah. Do you want to check the comments, see which ones you want to answer? Because there's a few.
I tried looking at the comments on my other screen and I could not find them. Let me pull it back up.
Okay.
Hold on.
There was one. Do you have any current setups that you're looking at?
Current setups.
Yeah.
So I do have current setups every week, but going into this week, I have made it clear. I'm pretty confused going into this new week. I'm not gonna lie, and you might ask me why. Well, the answer for that is because of this volatile market we're in on the foreign market. Okay. Um, Last week they just took a straight dive to hell on all of our foreign currencies. Okay. So if we look at the dollar index, there's a certain level I was suggesting it to reach to, and again, this is using the same concepts that I've been talking about. So on a monthly chart, if you look left, you're gonna have this monthly fair value gap, which is this candle's high and this candle's low. That was the first target. So if you extend that out in time, let's go ahead and put a horizontal line. I was staying bullish on dollar until these levels got hit. So here's our fair value gap right in here. I'll zoom into it real quick. So it's inefficient. Here's the fair value gap. There's also another one right here, and I'll go ahead and put a line on that. And it's going to be this candle's high, but I'm not going to slap a line on there. So there is inefficient price action on a monthly chart on dollar index right here. I was staying bullish on dollar until we reached those levels. Last week, they just straight ran to that first level, you see? So now that we hit that level, I'm not sure how far or even if we'll get any sort of retracement. I know we have this last down close candle prior to that breach higher. We go to euro. Excuse me. On a forward chart, I do recall seeing this area right in here. We have this bullish candle. Not a huge body, so I'm a little bit skeptical about that. But if you extend that out in time, wick to body, like I just taught, here is a potential level I'm going to be eyeing going in the next week. My voice is getting kind of froggy, my bad. So we could see euro spike up into there and continue lower to see that bullish dollar keep on climbing.
There was a guy who asked 3 questions in a row at the same time. Do you use 50% of the order block at all?
Like I said, I do. But the only times I'll do that is if I dissect and dig into that order block on a lower time frame and see another imbalance or PD array. that is inside of that higher time frame order block that I am noting. So
Any steps to spotting the smart money reversal before it happens?
yeah, we did talk about that in this recording. Like I said, smart money reversals. I'll go back to it real quick. A smart money reversal is gonna always happen inside of a higher time frame PD array. Okay. So for the example I gave today, it was here. Remember this blue zone right here was a higher time frame monthly bearish breaker. Okay, that's why the zone's kind of wide, because it's arrived at on a monthly time frame. So your market maker sell model is here. Your smart money reversal is up here. Okay, we're expecting that smart money reversal to happen here. Why? Because that monthly bearish breaker. We're gonna go ahead and draw that out for you again. Wick to body, extended out in time. That level is going to be significant when price comes back to it. So here is your market maker sell model. Smart money reversal inside of the higher time frame PD array.
Wait. It says when a higher time frame PD array is hit, like the case that you just showed with dollar costs or Dixie, do you continue with the bias or do you anticipate a reversal? I think he was
Okay,
talking about Dixie ripping into the new highs. And
okay, so we can look at that real quick. That's a great question as well. I used to get caught up a lot anticipating a reversal like that. I'm not gonna lie, but given the fact that, look at this chart, okay? Look at this chart. All last year into this new year, this trend does not show any signs of reversing yet, okay? Those levels that I identified on that monthly time frame over here, if you look above them, what do we have? We have a historical old equal highs. So no, I'm not expecting this to be a top on dollar just because it is a monthly PD array. We may see like a little midweek reversal just for dollar to create its weekly low this coming week and then just continue rallying higher. So that's what I'm expecting. I'm expecting price to take out this swing high here. To wrap up the end of the year, I think we're gonna blow up this swing high and just keep rallying higher, because right above those swing highs there, we have all this. This is all inefficient. See all the gaps in price right here? So that's why when Michael says Forex is gonna die, I don't think he means it by the markets are gonna die. Like there's no longer gonna be a Forex market. I believe he's hinting at it as Euro USD is gonna die, aka it's gonna go to hell. You know what I mean? Because dollar is just gonna keep on rallying higher all into next year. So that's what I think he's referring to secretly.
and then what is a market structure shift to you? Do you look for lows to rebalance or do you look
I
for
don't,
a low to rebalance a bullish fair value gap to get broken?
I don't fuck with market structure breaks. I don't ever consider them. That's just me. Everyone's different. I don't bother. I just trade the raw price action. You know, I stick to one bias until I'm proven wrong. I don't really dig into the whole lower time frame market structure breaks. You know, that's just me though.
Wait, and then uh, two people wanted to see just one quick example of a bullish breaker.
Bullish breaker.
Yeah.
Okay, we can try to dig in here and find one. Let's go to, well, bullish. It'd be hard to find a bullish breaker on a foreign market because the foreigners are all rallying or declining. So
Maybe
let's go to
NAS or something.
go to USD CAD maybe. It's not going to be pretty. You guys are putting me on the spot right now. Okay, we have a bullish candle here. We have a decline lower. The decline lower does what? It takes out lows here. That's the important part. What happens when it takes out the low? It also digs down and fills in this fair value gap here, okay? And I will draw it out for you. Extend it out in time. There is a low. And it fills in this inefficient price action and rallies higher. Okay, let's zoom in. So it's a false break lower, turtle soup, stop run below this low, fills in the fair value gap, goes higher. Here is your market structure, quote unquote, shift or break when price breaks above this high here. My eyes are going to draw to the last bullish candle, which is going to be this one right here in particular. That's my breaker. Extend it out in time, wick to body, extend that out in time. Why is that a breaker? It's because they used this bullish candle right here on a daily time frame to run price below this low here, to fill in the imbalance here, to make it efficient. Market structure break. So this is the daily bullish breaker. Let's go ahead and there you go. Look at the relevance of that level in the future. Price comes down, hits that breaker twice. They do it right here, and they do it again here. There's also a bullish order block right here, this red candle prior to the bullish run up, right back down into the breaker zone again. And you blend it with the breaker and the order block, which is this red candle. So you're blending more than one thing together. But there's you a great example of a bullish breaker. And that was free, that was off the dome.
Yeah.
Didn't even know this existed.
One more question. I think you already went over this, so sorry if it's a repeat question, but what do you expect for EU after breaking out the old low? Struggle with retracement or continuations?
I'm going to go ahead and just, I don't know. Probably lower prices. I don't know.
Yeah.
That thing's probably just going to keep tanking lower. But, man, it's been an honor to participate here, man. But I got to wrap this one up.
Yep. Thank you guys all for coming out. Hope you guys learned something. And if you want to check out Finesse's socials, they are linked in the description. And I hope you guys have a good one. So, see you guys.